We all have heard that having a well-diversified investment portfolio help you achieve your financial goals. But to have a well-diversified investment portfolio, we need to strike the right balance between equity and debt instruments. Today in this video, we'll see will HDFC Life Capital Shield Plan help you achieve the right balance between equity and debt and also help you achieve your financial goals in the long run. We'll have a detailed analysis on this so that we'll come to know whether is it worth investing in this HDFC Capital Shield plan. Hi and welcome to holisticinvestment.in YouTube channel. We help individual investors like you to take right financial and investment decision. HDFC Life Capital Shield Plan is unit-linked non-participating life insurance plan. Today let's look into its features, benefits and also its IRR analysis. By that we'll come to know what is its potential return. Will that potential return help us achieve our future milestones? We'll also compare this with a pure term insurance along with NSC or ELSS to get a better picture of this plan and also see whether it suits to our investment portfolio or not. Now let's see the features of the HDFC Life Capital Shield plan. You need to pay premium only once for a limited period of 5 years. It offers investors with dual benefit of market return and at the same time life insurance coverage, loyalty additions to boost the fund value from the end of 6th policy year onwards, annual maturity benefit to protect your investment from market risk, option to make lump sum partial withdrawals from your fund after the first 5 years of your policy term. Now let's see the types of fund options available in this HDFC Capital Shield plan. If you are a high risk appetite investor, then you can opt for Capital Growth Fund. If you are a low risk appetite investor, then you can opt for Capital Secure Fund, catering to your financial goals and your risk appetite. Now let's see the benefits under the HDFC Life Capital Shield plan. The first one is maturity benefit. Once the policy has been matured, the life assured will receive the higher of fund value or assured maturity benefit. The second one is death benefit. During the life assured unfortunate demise during the policy term, the sum assured on that will be higher of sum assured, fund value or 105% of the total premium paid till the date of death. The third one is loyalty additions. It is a percentage of average fund value will be added to the fund value as in the form of additional units from the 6th policy year onwards. The loyalty additions will be added for both single pay and limited pay policies. The fourth one is partial withdrawals. Partial withdrawals can be done after the lock-in period of 5 years. The minimum partial withdrawal amount is Rs 10,000. Now since this is a ULIP plan, there are various charges associated with this HDFC Life Capital Shield plan. The first one is premium allocation charge. This charge varies according to your premium paying year and premium paying mode and it ranges between 3 to 9%. The second one is fund management charge. The daily unit price already includes the fund management charge of 1.35% per annum of the fund value. It is 0.50% per annum for discontinued policy fund. Third one is investment guarantee charge. The daily unit price already includes the investment guarantee charge of 0.5% per annum of the fund value over and above the fund management charge. The fourth one is policy administration charge. It ranges between 0.12 to 0.39% per month of the annualized premium, increasing at 5% per annum on each policy anniversary thereafter. Fifth one is mortality and other risk charge. The amount of the charge taken each month depends on age and level of coverage. Sixth one is partial withdrawal charge. The policyholder will not be charged for the first 4 partial withdrawal requests for each policy year. Seventh one is miscellaneous charge. Any policy alteration request initiated by the policyholder will attract a charge of Rs 250 per request. The last one is discontinuance charge. This charge depends on your year of discontinuance and also your annual premium amount. There is no charge from the 5th policy year onwards. From my perspective, the charges like fund management charge and also the mortality charges are justifiable and reasonable, but whereas the charges like partial withdrawal charge, discontinuance charge, miscellaneous charge will only bring down your overall yield from the fund. As an investor, we do invest to get potential return from our investment, so we need to look at its charges and also see what impact will it have in our long run investment and what impact will it have on our gain from investment. Now let's see the advantages of the HDFC Life Capital Shield plan. It is single or limited premium policy and provides life insurance coverage for the whole policy term. There is convenience in choosing the premium paying mode. Even if the fund does not perform well, you will receive should benefit. The policy has tax benefit as per Section 80C and Section 1010D. Partial withdrawals are allowed to meet emergencies post lock-in period. Now let's see the potential disadvantages of the HDFC Life Capital Shield Plan. There is no rider option available under this policy. This policy does not allow any loan facilities. So there are already many policies in the market which has a rider option and also loan facilities that benefit the policy holder. The lock-in period is for 5 years for surrendering or exercising a partial withdrawal. So if you have a short-term financial goal or if you have an emergency need, then this fund won't be that beneficial. The various charges associated with this policy will have a significant impact on its returns, which will bring down its overall potential returns. So with these returns, achieving your financial goals will be harder. So as a policyholder, it is wise to choose a policy or investment vehicle that caters to your financial goals and also your risk appetite. Now, before choosing any investment vehicle or policy, we have to be aware of its potential return. For that, we have to see its IRR analysis. IRR analysis means internal rate of return. By that, we come to know whether this plan would be beneficial for us in achieving our financial goals or not. Now let us make certain assumptions, so comparing it would be easier. There is a male whose age is 40 years, his sum assured is 12,50,000, his policy term is 10 years, premium paying term is single pay, premium is rupees 10 lakh. If you see, this benefit illustration is taken from HDFC website and the return of 4% and return of 8% are not guaranteed, they are just assumptions. Return of 4%, that is the worst case scenario, its IRR seems to be 0.98% and return of 8% under the best case scenario, its IRR seems to be 5.06%. If you see, this 5.06% is also not guaranteed and it's a best case scenario. Even in the best case scenario, it has not been able to match up with the bank FD rate. So will this IRR help you achieve your financial goals? Definitely not. So as an investor, we need to choose an investment vehicle or a policy that beats the inflation and also helps us to achieve our financial goals. So now let us see the alternatives for this HDFC Life Capital Shield Plan, which helps us beat the inflation and also helps us achieve our financial goals. Now let us compare this HDFC Life Capital Shield Plan with a pure term insurance along with the NSC, so that we would come to know whether this plan add value to our investment portfolio or not. Let us make similar assumptions, so comparing it would be easier. Here the sum assured is 12,50,000, policy term is 10 years, single premium is 49,500, the balance amount for investment is 9,50,500, which can be invested in NSC or ELSS as per policy holder's choice. If you see, a pure term insurance along with NSC, which is fixed income savings scheme, can generate an IRR of 6.25%, whereas a pure term insurance along with ELSS can generate an IRR of 10.69%. If you see, the risk is low in NSC, even it can generate a better return when compared to HDFC Life Capital Shield Plan. And if you are willing to take risk, then you can invest in ELSS, which can generate an IRR of 10.69%, which is an inflation beating return. So why do we invest for? We invest to get inflation beating return, because only with inflation beating return we can achieve our financial goals. So choose your investment vehicle wisely. Now let's see the final verdict on this HDFC Life Capital Shield Plan. It provides an opportunity to invest in equity and debt related instruments with guaranteed returns. Here the sum assured on maturity won't help you achieve your financial goals. Here if you see, you can't enjoy the benefit of both worlds of equity and debt to full extent because of the low yield compared to other investment. For an investor, it is advisable to build a well-diversified investment portfolio that takes into account your financial goals and also your risk tolerance. So consult your financial advisor, so he would be able to create an ideal investment plan or an investment strategy that help you achieve your financial goals and future milestones. A detailed review on this HDFC Capital Shield Plan is available in our website in the form of a blog post, the link to which is given in the description below. If you have any doubt regarding this or any other financial or investment decision, don't hesitate to book an appointment with our financial expert. The link to the appointment is given in the description below. And also, would you like to know more about finance and investment? Then we would recommend you to attend our live webinar. The link to the webinar is also given in the description below. The webinar is absolutely free. If you like this video, hit like, and if you are new to our channel, please do subscribe.